the more the curve goes closer to zero, because the long end's going up in terms of yield, the more it's a sign that they're going to have to do something. My point I've been making for a long time, I think last time we spoke, I said this, is the recession got priced in last year. Crypto assets don't go down 80%. The NASDAQ went down 35%. The long end of growth technology like ARK was down 78%. That was the recession, right? So what we've got is markets that are forward-looking because they understand the liquidity cycles now. So that's why they're going up and have been going up. I managed to participate in most of this in both crypto and in technology stocks because I knew that liquidity was coming back slowly. So even though the Fed are doing quantitative tightening and the Treasury issuing, because of this drawdown and this reverse repo, all of this stuff basically means they've not been tightening liquidity for ages now. You zoom out, put it on a log chart, it is, right? It does trend perfectly. It's just that the cycles within that trend, when you don't put them on a log chart, look horrific, and most people don't have the stomach for it. You and I have been around this long enough to realize the pain is part of the risk is part of the reward. You have to go through that to have an asset that goes up 20x, each cycle. So I think it's been decoupled for a while, as you say. It feels that new capital's coming into the space because it's moving out of the risk curve. So we saw Bitcoin going up first part of what I call crypto spring. So all year it was Bitcoin, and that was driven by, I think, just alts bleeding and that washing machine. But what we're starting to see is a movement towards the ETF, and that gets front running of capital from other people as well, hedge funds and others. And then eventually we got the news today that BlackRock has probably started to buy some. Who knows how much that is, but let's call it a couple $100 million either way. But so the way to think about the ETF, I think is really useful. Here's the crypto economy, and it has been starved of new capital recently. And the ETF is a trade deal between TradFi, the TradFi economy, and this new economy. So we've just started a trade deal. Doesn't mean we're going to get the trade, but it's looking like we'll start to get foreign direct investment into the crypto economy. What happens then is how I think about this. My mental model is, okay, so the money goes into Bitcoin first, but everybody who's been in this market has been front running it by owning Bitcoin. So then the next thing they'll go is, well, they're going to do the ETH ETF next. The spot ETF will happen as well.
Of course.
It'll be later, and everyone's going to, as soon as the Bitcoin one are done, they'll front run it by going to the ETH one because they know that's the next one. We will see that. We will see, the rise of the hedge fund industry, the capital coming in, the pension funds coming in. Matt Halstead and Mike from Texas Teachers are kind of showing the way and how that's done. So they're all coming, and it will all happen over time. The Bitcoin ETF, I don't think of it as a one-off event.
I agree.
People are thinking of it as like this liquidity injection into the crypto economy, and I'm saying it's a trade agreement. Trade agreements really start working when people are starting to get return on their capital in that new economy, and then they pile in. Do you remember when China started opening up and people started putting a little bit of money there? Before you knew it, you'd be in Shanghai and everybody's been posted there, being given $1 billion, set up an office for us there, figure out how to make money. That's what will come. So I'm less concerned about the start, but this pipe is going to be an important pipe to bring kind of RIAs and others into the space as it moves. And if you think about the halving, it's so beautifully timed. Last time and this time, I can't remember the previous time, but last time is like, okay, we're going to reduce the supply of Bitcoin whilst we're going to jam the maximum amount of fucking money into the system as possible. Here we are again, going into some liquidity, whatever that's going to look like, plus the Bitcoin spot ETF, all around the same time of the halving. It's like, you couldn't ask for a better picture.
According to crypto analysis, Bitcoin is entering a significant phase. This phase usually begins 6 months before Bitcoin's halving event and lasts for a year and a half afterward. History suggests that this phase outperforms the buy and hold strategy. PlanB's stock-to-flow model indicates that Bitcoin's long-term growth is linked to its scarcity, which increases during halving events. The last halving in May 2020 was followed by Bitcoin's surge to over $69,000 in November 2021. The next halving in April 2024 could be different, but he remains confident that Bitcoin will follow familiar patterns. Elon Musk is making a special guest appearance at the UK ICE Summit, and it's got people talking. He's the tech genius behind Tesla and SpaceX, and he's got a knack for sparking speculation. Musk's presence at the UK ICE Summit is a big deal. It's a global stage for AI leaders to share their vision. And when the UK's finance guru, Rishi Sunak, hosts a live chat with Musk, it's bound to get exciting. Why is this a big deal? Well, it's all about AI, the tech that's changing the world in a hurry. Musk and Sunak will dive into AI's future and the challenges it brings. What's particularly cool is that Musk has always been vocal about AI's potential and dangers. He's a bit like a tech prophet, warning us about unregulated AI. And his presence will amplify these discussions. Plus, it'll be a major moment for AI worldwide. The two-day AI Safety Summit will be a hotbed of ideas and solutions. So what's the big buzz about Musk's chat with Sunak? It's a chance to see where AI is going and whether it needs some ground rules. October was a wild ride for the stock market, but MicroStrategy was an exception. While other big players dipped, MicroStrategy's stock soared, hitting $448 on October 25th. What's MicroStrategy got to do with Bitcoin? Well, Bitcoin had a bullish October too. Everyone's buzzing about a possible Bitcoin ETF that could make Bitcoin mainstream. But here's the twist. MicroStrategy might be the backdoor way for institutions to get into Bitcoin. It's a tech analysis company, but it's famous for holding lots of Bitcoin. Like 158,000 Bitcoins, worth over $5.38 billion. Plus, unlike Bitcoin ETFs, MicroStrategy doesn't have fees. Other ETFs can have hefty fees that add up over time. In Bitcoin's chart, it's showing bullish patterns like a pennant. This is good news for MicroStrategy since they're essentially a Bitcoin company now. The number of Bitcoin whales is growing too. These are holders with over 100,000 coins. Still, while the stock market was a roller coaster in October, MicroStrategy and Bitcoin had a smoother ride. Bitcoin and stocks, who knew they'd make such a dynamic duo? Let's continue our enlightening discussion with Raoul.
The everything code, which was the idea is that because there's so much debt that needs to get refinanced every 3 to 5 years, we get this 4-year cycle. The reason being is everybody reset interest rates at zero in 2009, and we've been following this 4-year cycle ever since. The whole economy's following it. It happens to be the halving cycle as well. It's all the same thing. And so what I discovered, and I think I was the only person to do this, was I found out that the Fed balance sheet basically is a 3.5-year lag of the interest payments that are due from the previous cycle. Now, if you think about the previous cycle, well, what was that? The pandemic. There was I think technically it would be called a shit ton of issuance that happened then.
Slightly.
And so that needs to get monetized, right? And we're seeing this is early stage, but we've got like 12 trillion of this stuff to roll. Plus the new issuance. There's no way. It can't happen. So either the economy goes down the toilet. My view is the reason the Fed are so slow is because they want inflation to undershoot to give them the cover to refinance the debt. If not, they'll do what the Japanese are doing, which is yield curve control, which is buying all bonds at a fixed price. So let's say they say 5%, we'll buy any bond you want to sell us. That is still more cowbell, more stimulus that comes into the system. There is no way of managing an economy that grows this slowly with this much debt. If you had a faster growing economy, it'll be fine. But let's say on average, to make the maths easy, let's say the economy grows at 1.5%, the trend rate of economic growth is about 1.7%. The US government is about 120% of GDP in debt. And interest rates, if they're above 1.5%, means all the economic activity just goes to pay the interest on the US government debt. Problem is the private sector, they're over 100% of GDP in debt, so who pays for that? So what's happening is the Fed are monetizing all of the government debt 4 years later, or 3.5 years later, and the private sector does its own thing. But there's just not enough GDP growth, and that's the problem. That's what we're seeing in the market. That's what's going on here. So stimulus is the only way.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.